Let's move on. Mr. Price Group is a value-oriented, cash-only fashion and home goods retailer with a market cap of 29.5 billion rand, headquartered in Durban. They're a big supporter of the Sharks rugby franchise. Now, that comes from Paul, you can be sure of that. It trades on a price-to-earnings ratio of 20, dividend yield of 2.6%. Should I ask you, is it hot or not, before we start?
Well, it's been a fantastic performer. The chart just looks great, but it has broken down a little bit in recent times. Why? Because the top end of the credit and retail and consumer market is perceived to be fine, but the bottom end, there's real anxiety about a slowing in credit extension and all sorts of problems associated with it. So it's the same
issues that you raised with
and the economy isn't delivering new jobs. There's a concern that the public sector, because of pressure on government, may pass wage increases which are below expectation. So there are all sorts of creaking going on in the lower middle income space. Having said that, I think the Africa growth strategy here is obvious. It suits
them even better.
It really does suit them well, because it's that source from China, short runs, quick turnover. It's a brilliant, brilliant model.
I like the fact that you're referring to China, because of course last week we had the BRICS summit in Durban, and amongst other issues there were many agreements on trying to increase intra-BRICS trade. Would it benefit companies like Mr. Price?
Yes, I think it probably would, Godfrey. One of the problems they currently have is, getting the goods in from places like China, for example, coming through South Africa, attracting duties, and then putting them back into the rest of Africa. We want to try and get rid of that. Try establishing free zones, either within South Africa or bypassing South Africa altogether and going into the rest of the continent. So there are many ways you can skin the cat here. And there are many ways you can get the prices down, even for the relatively low-priced goods that Mr. Price are bringing in. So I think, yes, I think greater cooperation on that front could actually be very good news.
Is the market right to be pricing them slightly lower than they're looking at the moment?
No, I think the market's given this one a really big thump, because of all of the shares that we're talking about today, this probably, and Paul, you can correct me if I'm wrong, this may have the highest foreign investor component of any of them.
Is there for opportunity for them? Because at the BRICS they spoke about the fact that of course you're trying to increase intra-BRICS trade. Many people say that's China coming into Africa, but there's also been discussion that you actually want a reversal of that process as well. So companies in South Africa, in Africa, reversing, if you like, into the other BRICS, so into China, into India, into Brazil.
Look, it's a nice idea, but to be honest, there are no concrete plans that I'm aware of at this point in time. Maybe in the long distant future that could happen, but I think they'll have more than enough to contend with in going into the rest of the continent.
So what's your answer? Is it hot?
No, I'm hot on this one, very much so.
Paul?
Yes, look, I'm hot on it too. I'm just a little bit worried that the trading update, which is coming in May, so in other words in about a month's time, is going to confirm that this price level is more appropriate to the current earnings prospects. So I'm a little bit anxious to know what the same store sales is going to look like. So, but I like the concept and I like the rollout, and I think they've been through tougher times before, so I'm happy enough to give it the hot.